Gold has been hitting historic highs. We are talking prices above $5,500 per ounce this month. Meanwhile, Bitcoin has been relatively flat in the 85,000 to 95,000 range. That divergence has sparked a ton of debate in finance and crypto circles. Hello and welcome back to the Tomorrow Money Show. I'm your host, Mnyaradzi Togarepi, and today we are talking about something that's grabbing headlines across global markets, this record-breaking rally in gold prices and what it could mean for Bitcoin, which hasn't really moved the same way recently. I'm going to break this down factor by factor in a way that's clear, especially if you are listening from Zimbabwe, across Africa, or anywhere else across the world. Factor number one: safe haven demand and geopolitical stress. The first key reason gold is booming right now is safe haven demand. When markets get nervous, whether it's due to geopolitical tensions, trade conflicts, or concerns about currency stability, investors often flock to assets perceived as reliable stores of value. Gold has literally been doing that for thousands of years. Right now, gold is being bid up as a hedge against uncertainty, and that's pushing price up aggressively. I'm sure you know about some of the geopolitical events and uncertainties in the world right now, including the recent capture of the president of Venezuela, Maduro, by the US military, the ongoing tensions between Japan and China, the Greenland issue, Iran, tariffs, and so on. The list is very long. Investors are buying gold because of these factors. On the other hand, Bitcoin is sometimes called digital gold, but in practice, it hasn't been behaving like gold in moments like this. Instead of seeing Bitcoin rally alongside gold, we have seen Bitcoin's price stagnate while gold climbs because many investors still view gold as a safer haven in terms of stress. There is no doubt that Bitcoin shares a lot of its characteristics that gives it value with gold, especially on scarcity. However, to be realistic, the old folks have not started loving this digital gold the same way we do. The market right now is favoring what it already knows, and gold for many institutions and older investors still feels that raw better than Bitcoin. Factor number two: central banks and institutional demand. Who is buying gold and who is not? Central banks around the world have been steadily adding to their gold reserves large quantities that help diversify from US dollar holdings and protect against currency risk. This kind of steady institutional demand is a major driver of gold's price rise. China is buying gold, India is buying gold, Turkey is buying gold, Russia has always been buying gold. Every central bank is letting go of their US dollars to buy the yellow metal, probably due to the geopolitics that I mentioned. Bitcoin, by contrast, is not being purchased by central banks in a significant or systematic way. While there is increasing institutional interest in Bitcoin, especially through things like spot Bitcoin ETFs, it's still private investors and traders, not sovereign reserve buyers, setting the tone. For Bitcoin to match gold's rally on institutional buying alone would likely need a much broader adoption by big institutions and possibly even sovereign reserve managers, something that hasn't happened yet. Factor number three: the US dollar debasement. Gold is priced globally in US dollars. When the dollar weakens, as we have seen recently, gold becomes cheaper for holders of other currencies, which pushes demand and price upward. Right now, markets are pricing in potential US Federal Reserve rate cuts, the rate cuts that President Trump wants, and a weaker dollar, which is what President Trump also wants. He has been advocating for this, and gold is benefiting from all of that. Bitcoin also shares this inverse relationship with the US dollar over the long term. In theory, as we would like to say in the crypto space, Bitcoin does not go up in value. It's the dollar that has been losing value against Bitcoin all along. But recently, Bitcoin's price behavior is much more driven by market sentiment and risk appetite than direct reactions to dollar strength or interest rate expectations. So while a weak dollar helps gold right now, Bitcoin's price isn't yet reflecting it in the same way. Factor number 4, price stability and market behavior. Here I'm talking about the way investors react to volatility. Gold's price moves relatively smoothly. It doesn't usually whip up and down the way Bitcoin can. That stability is actually part of why investors tend to it during uncertainty. Bitcoin, on the other hand, is inherently volatile. This kind of price behavior excites some traders, but it also scares off investors seeking steady value preservation. During turbulent macro periods, many of these cautious investors prefer gold's slower, steadier moves over Bitcoin's wild swings. So when markets are jittery, you often see capital rotate out of volatile assets, including Bitcoin, into less volatile ones like gold. Factor number 5, liquidity conditions and market cycles. Gold's rally appears to be taking place in an environment where liquidity is improving, but not nearly as abundant as it was in previous cycles that fueled massive Bitcoin rallies. When money is flowing freely with very low interest rates, Bitcoin historically has exploded. But that kind of environment isn't here yet. Interest rates in the US are still considered to be high, not to forget to mention the bond market crisis in both France and Japan. Some analysts see this pattern as a staggered rotation. Investors first flock to gold when uncertainty hits, then later migrate back to higher growth risk assets like Bitcoin once stability returns and liquidity improves. This dynamic suggests we might see Bitcoin's price move more strongly, but usually after the macro conditions that drove gold the demand begin to settle and liquidity improves. So, in summary, what does all these factors mean for Bitcoin? Right now, gold's rally highlights that many investors still gold as the primary safe haven in terms of economic uncertainty, and institutional flows from central banks are supporting gold in ways Bitcoin isn't seeing yet. Also, a weak dollar and rate expectations are pushing gold up, while Bitcoin's price is held back by its volatility and risk on profile. But here's the interesting twist: this divergence isn't necessarily bad for Bitcoin. Historically, markets often rotate out of safety assets back into risk assets once volatility abates and liquidity improves. Some analysts think Bitcoin may follow gold's lead with a lag, sometimes measured in months once the macro picture clears. And unlike gold, Bitcoin is an extremely asymmetric upside. So when it does start moving, the gains can be much dramatic. Gold is surging because the market wants safety, stability, and hedging against dollars and geopolitical risk. Bitcoin, meanwhile, is waiting for its signal, which might come once the fear subsides, liquidity returns, and investors start seeking growth again rather than just protection. I am not a financial advisor. I am just doing this to educate you. That's all for today's episode of the Tomorrow Money Show. If you enjoyed this analysis, share it with another crypto or gold enthusiast, and I'll catch you next time with more insights on how global finance is shaping the future of money.